History doesn't repeat itself, but it often rhymes. Mark Twain. Now imagine waking up tomorrow and your dollars buy half as much as they did yesterday. Your coffee? $18. Gas? $25 a gallon. Your savings account? Basically melting ice cubes. Sounds insane, but here's the uncomfortable part. This has already happened. Not once, not twice, dozens of times throughout history, and every empire thought it was different. The US dollar isn't just money, it's the main character of the global economy. About 58% of the world's foreign exchange reserves are held in US dollars. Oil is priced in dollars. Trade is settled in dollars. The dollar is basically the Wi-Fi of the financial system. And when the Wi-Fi goes down, everybody loses their minds. But here's the thing. Reserve currencies don't last forever. In the 1500s, it was Spain, then the Dutch guilder, then the British pound. Now, it's America's turn, and every empire follows the same Netflix storyline. Massive debt, money printing, overconfidence, then eventually, something breaks. Let's rewind to 1971. This was the moment everything changed. President Richard Nixon ended the gold standard. Before that, dollars were tied to gold. After that, the dollar became backed by one thing. Trust me, bro. And to be fair, it worked. For decades, America became richer, markets exploded upward, the S&P 500 became the greatest wealth machine in human history. But there was a side effect: debt, a lot of debt. U.S. national debt in 1980, around $900 billion. Today, over $36 trillion. That's not growth, that's the financial version of eating fast food every day and saying, "I'll start dieting Monday." Now here's where things get weird. The U.S. printed roughly 40% of all existing dollars in just a few years after 2020. Money printer go brr. Stimulus checks, bailouts, liquidity flooding the system like a broken fire hydrant. And for a while, people felt rich. Stocks pumped, crypto exploded, housing prices went vertical. It was like the economy chugged 3 energy drinks and started shadowboxing invisible demons. But inflation showed up. Because when you create trillions of new dollars, each dollar becomes a little less worth. Simple supply and demand. In 2022, U.S. inflation hit 9.1%. That was the highest in over 40 years. Now here's the scary twist. America's interest payments alone are approaching $1 trillion per year. Not paying off debt, just interest. That's like using one credit card to make payments on another credit card while telling yourself you're financially disciplined. And the world is noticing. Central banks bought over 1,000 tons of gold in a single year recently. That's one of the biggest gold buying sprees in modern history. Why? Because countries are slowly trying to rely less on the dollar. China and Brazil trading in local currencies. Russia reducing dollar reserves. BRICS nations talking about alternative systems. Now, relax. This does not mean the dollar disappears tomorrow. People online talk about dollar collapse like it's a Marvel movie ending. Reality is usually slower, messier, more boring. But cracks matter because reserve currencies die gradually, then suddenly. Just ask Britain. So what would happen if the dollar really crashed tomorrow? First, markets would panic. Stocks probably crash. Treasury markets go chaotic. Banks freeze lending. Your imported goods become wildly expensive overnight. Phones, cars, electronics, food. Remember, America imports a massive amount of products. A weaker dollar means everything costs more. Then comes the psychological part, and this is the real danger, because economies run on confidence. If people stop trusting the currency, they spend it fast, and that creates even more inflation. It becomes a feedback loop. That's what destroyed currencies in places like Zimbabwe and Venezuela. Now, obviously, America is not Zimbabwe. The U.S. still has the world's largest economy, the most powerful military, the deepest capital markets. And despite all the doom posting online, when global panic happens, people still run into dollars, not away from them. That's the irony. The dollar is simultaneously feared and trusted more than almost everything else. It's like the toxic ex everyone complains about, but keeps texting at 2 a.m. And here's another twist most people miss. If the dollar weakens, some assets could actually explode upward. Gold, Bitcoin, commodities. real estate in certain areas, because investors start searching for stores of value. That's why billionaires obsess over asset ownership, not cash. Cash is safe until it isn't. So, will the dollar crash tomorrow? Probably not. Could the purchasing power of your money slowly erode over time? That's already happening, and that's the real story. Currency collapse usually doesn't look like Hollywood. It looks like groceries getting slightly more expensive every year, rent creeping higher, your paycheck feeling smaller even after raises. A slow leak instead of an explosion. So, the question is, if you genuinely believed the dollar would lose major value over the next decade, what would you own instead? Gold? Bitcoin? Stocks? Real estate? Or do you think the dollar will remain king? Let me know in the comments.